All right. Good morning, everybody. Gonna get some jobs data today. It's not the big numbers, but any jobs data at all, want to pay particular attention to it since the Fed announced, over a year ago that they had defeated inflation and that the other part of their mandate is jobs. So everything job related, want to keep track of. We got JOLTS, which is very much like take this job and shove it. Is the grass greener on the other side? And if you leave your job, how easy do you think it would be to find a job somewhere else with comparable pay or even better pay than what you have now? JOLTS. This whole week, we're going to be getting job numbers. This is just a continuation of that theme. We've got Fed speakers throughout the day. We're really not looking for them to say anything new, right? It's been just reiterating the same comments, the same talking points over and over again. No expectation of anything different. We do have the SEC today, Atkins at 10 o'clock. And really, I don't think these Fed speakers this afternoon are going to have much impact. Got to keep it on the radar anyways, just in case, but I wouldn't expect much out of them. So by the time we're done with lunch, we should be done with any impact. And it would just be headlines after that. So we're back above the volatility trigger, 0 gamma, 10 and 4-day moving averages. Really, we're above everything again at this point. The only thing we have left overhead is the call wall, and that generally stays overhead anyways. We're still in this range, though, and this has to be dealt with. GTFO, we got to get out of the box. Now, this wick high that I marked really could just, be brought back here. Still the range we need to escape. So we're just chopping about. Now that we're through all of the moving averages, we need to keep it. If you're looking for a short, then that'd be a good place to start. Either rejecting off the candle in control, which is May 27, or a breakdown through the moving averages. We didn't quite get to the ADR, but I would say you want to count that as a hit. If you use ADR lines on a different platform like say TradingView or something else, it doesn't always match exactly from one platform to another, and that's because of what it's using. Sometimes it will use the 4 o'clock close. Other times it'll use the 5 o'clock close, and then others still will use the 6 o'clock open. Now, a lot of times those three things really aren't that far apart, but sometimes you can get a radical move between 4 and 5. So then when we open at 6, it's really off. I would count this as hitting the lower edge already, even though we didn't see price hit it. And if we hit one side early enough in the day, we can go to the other edge by the other end of the day. That would not make us bullish. That would just be a part of the wave and how price moves, right? So 59.92 cog line, the upper ADR half, not out of line. All we have to do is get through 59.50, which we tried to do yesterday and just failed to keep it. If we think about that rejection, we didn't really fall back, as bad as we could have. Here was an example where we got to 59.50 and we rejected it, and the fallback was intense. And we didn't fall back that far this time. So retest 59.50, make a run for 59.90 if we can get that breakout to stick. Otherwise, if we do break the lower ADR half, we will target yesterday's low, which happens to also be the full ADR, 58.65. And to get there, we've got 59.32, cog line, 59.11, 5900, 58.92 cog line, and then 58.65, level by level, marking it all the way down. We have a really wide floor pivot today. A wide floor pivot implies that if we do get a breakout, it doesn't stick. It's raining pretty good here, guys. So if I lose internet, you'll know why. I've got backups for if the internet flickers, but sustained power outage, I don't have backup for that. So this wide channel implies if we break out of the high, we'll come back into the high and close inside of it by the end of the day, and or outside of the low. But the low's a long ways off. So even just getting to the low would be a heck of a fight. We'd have to get through the weekly floor pivot and then through all of yesterday's price and then break the low and then expand beyond that. But this wide channel says even if we do make the trip, it's likely we don't close outside of the range, that we come back in and close inside by the end of the day. Yesterday was a wide range, so plenty of movement we can stay inside of. We did test the floor pivot overnight, and so far that's holding 59.11 cog line. It's a weekly floor pivot. Holding above that helps us maintain that bullish bias, but if it doesn't stick, then we'll be underneath it. As we've been discussing, the range continues. You can see over the last 3 weeks and now into the 4th week, this is the distribution that we're dealing with. And we're leaving more and more footprints behind to where it doesn't really matter where we go. There's something to hit across the highs. We've got something, really don't have much across the lows here yet other than this high volume node. And through the middle, we've got a lot of work. It's not very helpful at this point, right? It's not offering us any insight, no level or trigger, no defining line in the sand. Our point of control for this week lines up so far with what we had last week. Classic distribution shape. And we're holding in the range, but that's it. Got nothing other than that. Something new this week was how much work we put in around 59.50 compared to how much we put in last week. 10-day, 30-minute volume profile and TPO, we're almost back to a classic shape. Still have a little tail that needs to be taken off, and we won't get into those candles for another week at least. Throughout the next 2 or 3 days, we're going to wipe out the volume that made this point of control, and we'll look for it to shift somewhere else. Where that happens to go, we'll just have to look and see where the next highlighted zone is. We did put more work in at the same level that we're at. So even as we see these candles taken off on the left, because of the new work we've been putting in here on the right, that point of control may not move after all. 59.11 still the level we want to focus on, and staying above that really so we don't get below this point of control. We hit Friday's VPOC in early trading yesterday. It wasn't a perfect rejection, but that's basically where we turned around. It's where the point of control of yesterday really developed. We don't have a new VPOC today, so we just take that one off the table. Put a lot of work in this small amount of time last night. Greater than the open, or that little bit around 10:30, 11. You see all this time we spent down here at the point of control. And in this short amount of time, we got all of this volume. Nice front run on that 59.50. We're still around 2.75 from the 10-week, just holding in this range. We're not extreme, we're not back to zero. So just holding the status quo. This is considered digesting or correcting in time. It's a way to heal. It's healthy. We're just stalled out. We need that move. For premium traders, right, we don't care if it goes sideways. And if the S&P and the NASDAQ are sideways, so is 80% of the market. So if you're looking for, big runners, fast movers, you'll find them. There's always a stock pickers market. You can find individual stocks to play, but the broader market is going to stay stagnant and sideways along with the indexes. So you really want some movers, got to break the range. 10-week, about 0.5%, still maintaining that same sideways discipline. It's healthy. It's fine. We're not overbought, not overextended, just holding within the zone, digesting in a healthy way. The thing is about price going sideways, something we learned using the RSI Laguerre, is that a sideways market is a market that's building up energy. Think of plugging in your cell phone, charging it up. Market going sideways is charging, it's building up energy, so that when it makes a move, it has that energy behind it, like this sideways action back here. If we were to turn on the RSI of the gear, we'd see that it got a high gamma, probably 0.63, maybe even higher than that, 0.7. Then after winding up sideways, it finally made the move. Now, old school stuff would use things like Bollinger Bands, TTM squeeze, that sort of stuff, which is just another volatility indicator. The idea behind it was the same: market in a squeeze, forced, pushed out, get a big directional move. Same logic, same concept. At the end of the day, this sideways price action is going to end. We can't stay here forever. And when we do, it's very likely going to end in a big move. Doesn't have to be to the downside. It can be up or down. We're going to come out of it sooner or later. Miners down, bonds. Really, that's it. Uranium up on the CEG headlines with Meta. China's up, Bitcoin. Really, I mean, that's it. You don't want a rally day based on solar, uranium, industrials, nat gas. It says cloud is up, but it's just a little algo print. And if you look at where we are in the overnight, we had one algo print at 22 and another one at 23. Right, so some big shots in different directions. I would ignore that. Just focus on uranium, solar, jets, pot stocks, and sure, you probably find a play in those day trade, maybe 2-day trades. But jets, nothing there. Pot stocks have been a bleed. Nothing new there. Even tan, just an algo print up there. Got nothing. So uranium, big splash, headlines. We don't have the Mag 7. We don't have the sectors for a rally. There's no reason to think that a rally or a breakout in the indexes are going to stick unless we get headlines or some 0-day options flow that we can't see now. There's no inside day breakout from the stocks we have moving at this point. So you want to break 59.50, get outside of yesterday's high. We need something that we don't have now, right? We need the juice, the fire, something. We don't have it. We don't have the Mag 7. We don't have headlines, treasuries, bonds, Bitcoin, short squeeze, hedge fund factor rotation. We don't have anything. So if we can get the options flow, that could trigger it. Maybe some changes in treasury through the morning or a rotation in the sectors. But at this point, we're looking at another sideways day, waiting on data. And other than the job numbers that we're going to get, there's not much data to look for. the big numbers are coming at the end of the week. So it's very likely that they'll just hang out, sit sideways, and wait for the big numbers to make a more informed decision of what they want to do with their capital. Simple enough. You got the levels, break the Globex low, challenge yesterday's half, then yesterday's low, then last week's low, and we can really expand below 58.50 down to even 5,700. Nice shot, get that gap closed, right, from May 9. On the other side of that, run up, break 59.50. We can get to 6,000 by the end of the day, last week's high. If we get through last week's high, then 60.11 cog line would be about as much as I expect. And we'd be lucky to get that. So at GTFO, get out the box, get out the range, and you got a pretty decent day. Be careful, be safe. I'll see y'all tomorrow.